So, um, obviously we're still in that short position. Well, at least I am. I don't know what everybody else is doing, but I'm in the same position. Let's go to that chart real quick before we actually cover the lower time frame. So let's go to exactly where it was. So here's the position. Obviously, had a small wick below to 75s. Obviously, um, not going to TP after such a small retrace because the risk reward just doesn't align. If you're scalping and so forth, sure, be my guest. However, my personal approach with swings is I take a few higher time frame trades each month. Some play out quicker than others, right? For instance, these are basically all of the swings which I've took, and some obviously play out quicker than others. For instance, this one took 5 days, right? This one approximately 5 days. This one we had a drop and then it revisited, held, and then closed again back down here. This one, matter of fact, was quite quick as well. If we start looking like here, yeah, I mean, 2 weeks and a bit, right? Whereas this one, I guess the reason why it's taken a longer period of time is obviously because the price action's more choppy, right? If we look at the way we're forming these highs and the sweeps, we can see well we've been up in this upper range, right, around this above 70s for actually nearly 2 weeks, right? If we mark from where we flipped 70s from actually down here, but in terms of the type of patterns we're seeing at the highs, it's like drive one, we have another drive, and then we have equal highs, and then we are like there at the moment, right? Being here and so forth. So, I mean, some of them take longer than others to play out. It's just part of the game, unfortunately. And in terms of overall market structure here, um, I'm not really seeing anything extremely bullish. Like, I've been in the game a long time, and I don't know how to explain it. But when I view charts, patterns, price action, because I've seen so many different historical examples, so many different scenarios play out, I can kind of have this subconscious mind. Well, I guess, how can I explain? So basically, when I'm observing structure, because of the amount of examples I've seen in the past fail, I look at this structure and it goes through my mind thinking, oh, I've seen this before, right? And I haven't seen anything like this which results in continuation to the upside. You don't see this gradual 30-day incline of a trend line in a bearish trend, which results in obviously explosion to the upside. You just don't see it, right? Um, we start looking at the most impulsive legs we see. They are very vicious, very violent squeezes, right? The impulsive legs, they do not inherit these characteristics. I went over this, I think, in a previous stream, right? And we can see that inherently these big impulses, which result in obviously extended upside, they are very quick, very violent, very snappy. Now, why are they snappy? Why are they quick? Well, they are quick on purpose, right? Again, everything has to be looked at from a psychological standpoint, right? Why are impulsive rallies quick and why are the retracements quick? Impulsive rallies are quick because they want to leave people behind. They want people to FOMO into the positions. They want people to chase the price action, right? So if we start looking at the most impulsive of trends, they are quick because it creates FOMO. It leaves people not able to position correctly. People get in late into their positions, and also people short fueling a bigger move up. So in a bullish trend, we see these impulsive moves and they're quick on purpose, not from just a liquidity standpoint, but also from a psychological standpoint, right? They're quick to leave people sidelined. They're quick to leave people to build positions late. So when we go and observe this particular rally we see here, we don't see this extremely impulsive trend, which is leaving people sidelined. We see this gradual, very controlled incline, right? If we look at the PA, higher low, higher low, higher low, right? Very gradual move upwards. And like I said, I have never seen a move like this result in basically, let's say, doing something like this, right? I've never seen something like that happen, because you don't push the price up gradually unless you want to build liquidity. So, okay, so wait, some people can't see the stream. What's happening? Nobody can see my screen. Interesting. Give me a second. All right, I'm gonna switch channels over to the streams and VC. I've made the permissions so only Apex can go in there anyways. So just go over to the streams and VC. I don't think we get above 50 anyways, when I'm doing these. So I'll just head over to there, the streams and VC, and then redo it from there. Everything has been recorded anyways, so everybody head over to there. Is this better? Let me know in the comments. It might be not well, the chat. Sometimes the stages glitch out on it's one of these internal errors or something where the stages glitch out. So let me know if people are still having the same problem. All right, nice, nice, nice. Well, I'll quickly cover it again, in regards to what I was saying very briefly, but it is in the recording. So pretty much what I was saying was, on these impulsive rallies, which we see to the upside, they're very quick, very snappy. And the reason why is because on an impulsive rally like this, it leaves people sidelined. It makes people enter late. It drives FOMO. It makes people euphoric. And then obviously they enter late and end up as exit liquidity. On downtrends, why are they so vicious? Why are they so violent? Because the, well, downtrend's a bit more complicated. An uptrend, we have these impulsive moves to the upside to leave people FOMO, euphoric. On the downtrends, this is despair and making people very bearish, right? And obviously, we're seeing this, well, a move to the upside. 50% of the dump has been retraced on this initial move to the upside. But what I was saying was, on the impulsive moves, they're very quick on purpose because they want people to FOMO. They want to trap people. They want to make people make people enter into positions late. And what we see this time around on this gradual move upwards, we have to take into consideration the overall trend. We have to take into consideration the positioning of the market. And when you look at the PA, now I can hear him, or he's not saying anything. Wait, what? Anyways, so what I was saying was, on this, if we look at this initial rally we've seen towards the upside, we can see it's very controlled, higher highs, higher lows, a very slow gradual move to the upside, right? And we don't see this in impulsive trend shifts, right? Every single impulsive trend shift has been extremely violent, extremely violent, not where you see this controlled movement towards the upside. So this leads me to believe that this current move we are seeing to the upside for the past 30 days, well, around 30 days, right, is purely to build liquidity below us. We can already see the overall trend bearish. We can already see we are forming lower lows and lower highs on obviously the daily, weekly, and monthly. We can see we are in a macro downtrend, and all we are seeing now is we've formed this somewhat of a range. We've had a very gradual, very controlled move to the upside above the external range highs. We've been at the external range highs for about just under 2 weeks. So we have all of these factors about the trend being bearish. We've been consolidating up here, could be distribution. We'll find out in the next couple of weeks, months, maybe, where we'll be down here, and this would have been hindsight obvious, or we'll be somewhere else and I'm completely wrong. But what I'm saying is, this move is not like the type of move you see when we're about to trend shift into a bull market. This is not what you see. you usually see a very impulsive move upwards. For instance, if we go back to 2022 down here, right, we had this range, right, but look at the move, just straight up V-shape cover the whole thing. Didn't even see rejection from here. We saw a lower time frame one, but we did not see a violent rejection from here. We left everything around here, right? Violent impulses, right? You don't see these gradual moves. Same here. We push down here, instant squeeze. We had this very gradual move to the downside, tested the previous SR, big squeeze, and so forth, right? So if we start looking at all of the impulses, it's never gradual. You see, this was reaccumulation, and this is slightly different, but this was in a bull market. So it was expected to see this as reaccumulation, right? Rather than this slow twat, which is going to retrace. This was, I remember when we were around here, it was funding was quite negative actually when we were around here. But what I'm saying is this doesn't look like something you'd see in continuation to the upside. And this is just my personal approach, and from what I've seen in the past, right? You don't usually see this go up. So if we start looking at the structure now alone, see broken this local trend line. Let's go to, let's say, the 4 hour. So yeah, see here, bit of a messy trend line. What I like to do, you already know by now, I like to connect as many lows as possible, high the confluence, right? Where we start looking, we have 1, 2, 3, 4, slight bounce here, break, push up, swept this previous high here, push all the way down, and then push up to here. So right now, in terms of the actual trend itself, right, if we just, let's do this. We put that just above for now, so we can analyze that in the same position. Then obviously you have this trend line coming from like around here. We are precisely here. This high has already been swept. We already have this low here, right? And we are like here at the moment, right? The trend's broken from here. This is our first sign that there's exhaustion, right? We form a lower high. Our second sign after sweeping the high, and also if we start drawing here as well, we have this. We didn't quite get into that test, but you can see how the trend is slightly bearish. So let's say theoretically we lose this low here, then the liquidity below us will probably get swept. We have a sweep of these lows. Now these lows, I think we could get a bounce, right? I think we could get a decent bounce from here. And in regards to where that bounce comes from, if we get down to 73.6, probably going to have a very nice bounce from there. Because if we lose this, then we are genuinely quite fucking bearish. However, in the event we end up testing this, we are already in a bearish trend. So we can expect a bounce, but we can see that structure shifted, right? Why? We formed a lower low, right? Since this uptrend. So gradual higher highs, higher lows. If we come back down to here to revisit, right, in an impulsive uptrend, you see like this. If we go down to here and test here again, obviously you have to see if it reclaims, pushes back up the highs, but if it doesn't do that, then it's just going to be a failed rally, resulting in another lower high and then a push downwards. But I mean, overall trend on the 4 hour, again, we don't really see anything particularly bullish, but we also need to factor in the pivots as well. So if we start looking, so this was analysis which I previously posted. We had a high chance of revisiting. We swept the highs Monday, textbook sweep, pushed downwards, high chance of revisit as well. So this is the next key area to really observe, the previous weekly open. Let's go over to, so we have the monthly open chart. I haven't posted this anywhere. But if we start looking here, this was obviously the scenario of rallying afterwards. But we could see in the bull trend, dumping into, result in push up, push up, push up, this push down, push down. So what do you notice here? You notice that when we were in a bullish trend, each time at the start of the month, we ended up pushing up, right? Each month, right? The moment the trend shifted from 1010, so from here, right? The moment it shifted, we saw a change. but we saw a small push upwards into the monthly open whilst the trend was bearish. So this resulted in a push downwards. Now, we've had the impulsive leg down, and we dumped into the monthly open. We already retraced a nice amount, right? And what do we usually see? We usually see trends, redistribution. This was redistribution before, obviously, draw back downwards, right? So we could have expected that monthly open. Okay, to push upwards. Why? Because we're in a range. Same thing around here. We're in a range, right? We've already had a nice retrace. We're going to push upwards. And then we saw the sweep. And then we saw another push down then. Well, the trend was bearish when we got to here, monthly open. We already broke all of these untested lows, right? So what did that tell us? Well, the trend shifted yet again, similar to where we were here. So this was more risky to take a long around monthly open. Why? Well, because the trend broke. We broke all the lows. We broke everything significant, right? And we saw that extended push downwards. Now, what did we see after that, right? We've already had a nice retrace, similar to what we saw here. We're going to form a range again. Why? Well, we can see, basically, I hope you understand what I'm trying to say here is that when we have the trend shifts is where we have the monthly open dumping, right? And once we've had that significant trend shift, whether it be upside or downside, in this case it's downside, right? Once we've seen the significant trend shift, we go into a range. And once we go into that range, the monthly opens tend to pump towards the upside when we are in these ranges, right? So we had the retrace, similar to here. Same thing. We have 1, 2. Why? Because we're in a range. We're going to sweep highs, sweep lows. We dumped into the monthly open, and we see the push towards the upside. Now we're seeing a little dump into it now. Nothing major, but that's why we need to focus on FOMC as well, right? I don't really care about the so much the narrative and, let's say, the news and what he was saying. I didn't even watch it, right? I don't even watch any of these things because I like to analyze the charts. So we've seen 1, 2, 1, 2 here, and we can see this previous monthly open after these 2 months of obviously pushing upwards, 2 months pushing upwards. If we follow here, well, that means the monthly open, even though we're dumping into it, we do that. If we follow this, right? No, this. If we follow these 3, so this one, and this one, right? Let me see. This one, and this one, and then the next one down, just down from here. So if we inherit the same characteristics of the previous range, that would mean that even though we are dumping into the monthly open, it would push downwards anyways. In the event it starts doing this and pushing upwards, let's say we get another sweep of the high, I can almost say that we're probably going to retrace from here very quickly after we have that sweep if we push towards the upside from the monthly open like previous ones. But again, that would also mean that the patterns around FOMC have changed as well. Because if we look here, 1, 2, 3, 4, 5, 6. So out of 6 pivots around FOMC, we've seen 5%, 8%, 11. You get the draw. It's around 6 to 8% if you combine all of them, right? So if we do the same thing, precisely from exactly the moment we have FOMC, exactly the moment it should retrace 5% minimum. And that would mean somewhere around here, 5% drop would put us, around 72s, right? So we also have to factor in the fact that FOMC has resulted in this retrace, obviously, afterwards as well. So yes, we can see with this coincides with obviously the monthly opens, right? Because we can see here, out of 6 times, every single time we've dumped, right? Every single time. And then if we go over to that monthly chart again, that would coincide with the fact that if we are inheriting similar characteristics to this range, which I was talking about, where we have the trend shift, bull 1, bull 2, have the trend shift, bull 1, bull 2, factor in FOMC as well. So my point is that we don't have to see the sweep into the new monthly open being May, right? It would be max fucking pain, right? But FOMC coincides with this pattern here, and if that's the case, that means from May we might just whoop, like this, down to the 72s. So that's the pattern which I'm observing at the moment, and it's very plausible. It's just a matter of what we do first. Everything is a possibility in trading, right? We can sweep the highs, then we can reverse, or we can just push down directly from it. It still results in, obviously, us pushing back downwards if we are truly in a bear market. We don't have much time left, right? Let's mark the next monthly opens as well. Like if we start looking here, June, July. So here, right? Let me. Oh, fucking me. There. All right. So, like I said, everything I view in patterns, maths, numerology, right? So if we start looking at this, so we have 1, 2, 3, bang. 1, 2, 3, bang. 1, 2, which would be obviously wherever we are, right? I don't know where we're going to be when we're here. I just know that we have the timings, right? That's why I say timing is everything. I don't focus too much on the price. I focus on what we're doing. So let's say theoretically we are here or here into this area. I'm gonna just long. I don't even give a shit about this anymore. So we have 1, 2, 3, down. 1, 2, 3, the down. And then after we have the down, we have another 1, 2. And the next 3 puts us August. What do you think is going to happen in August? Well, I've already had here 1, 2, 3, down, 1, 2, 3, down, 1, 2, 3, up. So that's my the overall idea I'm leaning towards, right? We also have a 1, 2, 3 towards the upside, right? Now, if that happens, then fucking hell, that's going to be well unexpected, very unexpected. So my point is I guess this is a bit more of a complicated. This is probably confused a lot of people, but this is just a little insight into obviously what I analyze and what I look at, and I try to break things down in a more simpler format for my YouTube videos I occasionally create, and on Twitter as well as in the Discord. I try to simplify things without giving too much information, which is going to just be overwhelming, because I don't think people truly understand just the amount of shit which I look at. So yeah, we have a nice little pattern here as well. If we follow that, we could see the sweep of the highs. Wouldn't be unexpected, but it would mean that we obviously, if we follow this pattern, then we do this with FOMC marking that as well. Maybe in historically a bad month, 120-day first previous wick low around. So I mean, like, if I couldn't even put this into context if I tried to post it on Twitter either. I couldn't put it into context. It'd have to literally be a video format, because otherwise it'd just be too difficult to type out. So that's my point about August, right? Now you're probably wondering, well, is this the only reason why you focused on August? No, it's not. There's something else. But, well, there's a lot of other things which happen around there as well. I'm just not going to point that out. But this is one of the patterns as to why I think August will be the bottom. So wherever the price is, I'm just going to wait for the time being. And wherever we are around here, I'm going to long, no more shorts for me. Let's say we start ranging and doing this, I don't know, like something like this, and then we see another push, and then we do this. Wherever the price is, I don't care. I'm just going to long, low leverage, and look to aim for obviously that nice push upwards. So you believe start of August means bullish, not somewhere in August. It could be somewhere in August or the start of August. It's quite difficult to pinpoint an exact date. It's quite difficult to pinpoint an exact date, but yeah, around August. So that would mean, if we try to recreate this a bit more, let's say, user friendly. think I still got the lines on my chart. Yeah, I do. All right, let's just label it. So we have 1, 1, 2, 2, 3, 3. And then we have 1.
Your alarm is set for 3 o'clock.
What the fuck is Siri speaking to me if I ain't speaking to you? And then we have 2, 3. So it'd be like this. I couldn't map out the PA because this is just a bit too extreme, right? Obviously, I've got scenarios where we push down, have the sweep, and so forth. However, these are just patterns which would make sense to me. In terms of a 100% prediction, this is impossible. I just know we have timings and patterns. So that would mean 1, we have the retrace through here, here, 2, and instead on the third one, we have the push upwards. So, I mean, that's what I'm looking at the moment. But in regards to the patterns with FOMC, May, monthly opens, closes, we have like the basic structure here where we've obviously seen the daily form somewhat of a doji, indecisive wick both sides. And again, another little thing to observe about these particular candles as well is we see one very similar here as well. Very similar. Where else? Very similar. It's more of a pin bar rather than there. Exactly the same thing around here. This isn't too much of it. It's too big a body. But my point is we see trend shifts around these certain indecisive candles as well. We have one here. Does that mean we're going to go up? We'll have to find out, right? Does it mean we can go down as well? Coincides with the timing as well. So we'll have to see in regards to what happens around here as well. It could be the beginning of a trend shift where we push downwards as well. So, I mean, that's what I'm looking at the moment in regards to going into May, what we could see develop. If we look at things from a candle range theory perspective now, we can obviously see we've had 2 months of green. Obviously, this was just a little bit of green, but 2 months of green. We're most definitely going to close the candle green on the monthly unless we somehow nuked 69k within the next day, which isn't going to happen. So I did bring up another little interesting fact that we've never had more than 2 green closes during the bear cycles. After 2, it usually results in downside. So that's one other thing to observe. We never have 3 green candles in a row in a bear cycle. So if we did, that would be something we've never seen before. We've swept this high here. We have this being our key area here as well. So we'll have to decide how obviously the monthly is going to close, if it closes above or below. The closure doesn't really matter too much, it's because they're quite manipulated. But if we see the next monthly open do this, like it opens around here, like I said, we could see a sweep of the wick high if we are going to have that max pain scenario, right? On the other hand, if we just see a similar pattern to what we've seen in the past, it would result in just dumping, not having that retest and just going right back downwards, right? So I wouldn't marry this particular scenario either, right? It's just a possibility. But we see that we could see the sweep and then obviously push down through May. Hence why part of my position, which I added towards to improve the average, I've closed the ad, keeping the same position size. Because in the event we do somehow get to this scenario, again, I'm prepared for it and I can add back, improve my average again, and then remanage the position with a better average. So we could see that. On the other hand, we could just have that push downwards as well. So we can't really see anything from a monthly time frame for now. Only the fact that we've never had 3 green candles. In terms of this, don't really see much either happening here. Came very close to, yeah, I mean, we filled part of that. And if you start looking, let's say, yeah, so I mean, on the 3 month, you had 3 candles down here before the reversal. Here, you had one, and then just a massive squeeze, and then you had 2 months before the reversal. So I mean, you can't really tell much from this time frame. And then obviously, I think I covered this before, but we usually obviously have the first circle here on a 6 month, 1 red, 3 red, 2 red, 2 red. So we have about 2 to 3 red, which we could see, which would mean obviously this 6 month candle here would close red. So that puts us, yeah, around June, July, August period where we see the wick down, form the bottom, and then push upwards. So if we, matter of fact, this is actually quite interesting here. 6 month candle is going to close in the next month, which would mean that obviously May quite bearish. But if we start looking here, we're either going to have 3 red months, which would mean that the next quarterly 6 month candle is going to be the second half of this year before we obviously form a bottom, which would actually mean, I'm trying to pinpoint, it would mean that actually next 6 months candle could actually close green if we follow here and here. If we follow here, then well 3, which would, yeah, I mean, it would mean that buying anywhere within June, July, August period is the area to be buying. Obviously, if you want to be patient and just wait for the pivot in trend direction, it should happen around August. But yeah, we're not going to close this 6 month green. Let's look at let's read what you guys have said. Um, More like Discord server problems. Yeah, I think it might be Discord as well. Sometimes Discord messes up. 1, 2, 3, 1, 2, 3. Yep. I want a 5th wave Feb again. Well, no, not 5th wave. I want a 5th Feb again. Well, where we had that drop. Yeah. There was another interesting pattern which I did spot. I don't know if it's still playing out though, because I haven't used it for a few months. Let me mark it. Oh, well, it is actually playing out. Haven't used this one in a while. I used to look at the 5th of the new months a lot of the time. Seems like it's fucking working. Like, look. Yeah, I mean, shit. I thought it stopped working. I'll post about that shortly. So we have FOMC push down, power 3, then we have monthly close. So now we have to decide what's most likely going to happen into the 5th. If we follow FOMC power 3, yeah, that would mean that we could dump into the monthly open, continue to dump afterwards per FOMC's pattern of 6 months, and that would mean we form a local top or a local bottom around here. So what are we more likely to do? I mean, based off the structure, we're more bearish than bullish. So wherever we are around this date, we could see a pivot lower or a pivot high. Doesn't mean we're going to new highs. For instance, this one, it just like bounced, pushed above, swept the high, and then just went back down again. This one was just a pivot to push upwards, and then we just reversed afterwards. So lots of things to factor in. It's one of them things where you have to observe the pivot, the structure, and then decide what happens once we're there. It's like one of them present things you have to observe before it happens. Well, after it happens, I mean. Once we're at that date, you can determine what's most likely to happen. Sounds like a good plan. I know nothing. Yeah, I mean, there's a lot of, like I said, man. I mean, I have a very unique way of observing the charts and stuff. Obviously, um, on X, some of the things I post look extremely basic, um, and a lot of these maybe advanced people on X are trying to call out how basic I am viewing things, but they don't really understand what's happening in my head. It's just one of them things where if I post too many complicated details, it's just going to confuse everybody and it doesn't do anything. So it's one of them things where it's like um, I just simplify things extremely as basic as I can for just people to understand um, my thoughts and how I'm viewing things. So on X, people see just another influencer who's just posting a standard chart, but that's far from the reality of the way I'm viewing things. Loki Thursday needs to dump day again. Yeah, well, I mean, we'll have to see. We'll have to see. Sell house and long Bitcoin. Yeah, I mean, like when we get to August, no more bearish thoughts from me. Do you think the 60 zone can be retested already in May or the next month? It could be. Well, I mean, let's have a look if we done it from here to be another 21% drop. I don't know if that's going to happen in May, um, but yeah, I mean, I don't think if it could happen in May, but that'd be a bit extreme. It could make it maybe take 2 months if we are going to go back down to here. Killer has like 30 different BTC charts on his trading view list. Yeah, I mean, like I only look at Bitcoin and then I have all of my different thoughts on each different charts, and then I try to combine all of them together. I flick through them very quickly like this and start to like calculate based off my confluences what like basically I just mold everything together like very quickly instead of making one entire chart very messy. How much hours did it take to draw Bart Simpson? I mean, that was only like 5-10 minutes. What's the max leverage you would recommend for building longs around the bottom 3 to 10x? You could do the 10x strategy, which I covered. You could do that, or if you want to be a bit more on the safer side, then 3x. Definitely 3x on the safer side. If you want to do the 10x God mode strat, I'll be doing that. Then you could do that, but you just need to be prepared for like 2-3 re-entries and keeping your emotions in check and not over risking. If that makes sense. Like regarding long on 2.5x, what's the deal with it? Is it not better to buy a spot? As I was thinking about this, I truly do not understand. Okay, the reason why I wanted to be in a long is because I'm thinking 3 years ahead, which would mean that if I'm in a long, once we get to the top, and I believe the top is in again, I'm going to hedge the long from here with a short. delta neutral, meaning I can just short the entire next bear market down with zero drawdown. I'm going to do 5x longs. Yeah, I mean, like, as long as you have your plan in place. It would confuse them. Crypto is absolutely bad. Yeah, I know. It's crazy. What do you think about oil? Let's have a look. Um, Lots of chop. It looks like. Seems like somewhere like this, but this took years. Um, I did see a tweet from Trump back in 2013 or some shit where he said that oil will go to 200. I don't know if I believe it or not. It would be fucking hilarious though if it did. I don't know though. I couldn't tell you with oil. Very difficult. You can see that literally every behind every peak and low, there's some sort of news which is marking the tops and bottoms. What can an entire artist do you think long in with Coin M is good instead of USDT? I've seen a lot of people use Coin M. I just prefer USDT. That was Arab Spring 2011, 2009. Yeah, yeah. BT taking a break from fishing. I see fish on the collection. Yeah, let's take a look at USDT dominance again. Let's see what's happening here. I mean, this is quite a difficult chart as well. I mean, you can't really tell much from here. I did bring up in the last stream, though, that we should see a sweep of this wick high. For those who saw the other stream recording or remember, I did say, like, we could get up to here, sweep here, then we need to hold bullish structure, which is, if we go down to the 4 hour, bit of a messy one. Let's go over to here. Looks like we're actually forming a pennant like this. And a pennant would be like this testing here, which would be equivalent to obviously here, which I brought up just previously. So yeah, I mean, looks like we're forming some sort of a it's a bit of a messy pennant, but we could see that given we hold previous Asia low here, marking with Bitcoin Asia high. So if we hold around these, then yeah, that would mean that instead of Bitcoin having the sweep of the highs of 79, it would mean we just push upwards and then dump from the pivot. On the other hand, structure's kind of messy. This is a pattern. A pattern can be invalidated. If we're looking at just structure alone, I mean, you can't really tell much from the structure alone. I mean, like we have like here, um, which ideally we need to hold above. I mean, you have small little break, squeeze here. So yeah, I mean, can't really tell much to be honest with you from this chart. And then you have the biggest Ponzi scheme of all. Now it's that it's going through one of these phases where it's like you see, like once you have the V shape, you have this gradual move up before like boom. So it's just gonna like I don't know, like do this gradual move up before the boom again, wherever it goes in it. It always does that after the V shapes. Basically, it just V shapes and then it's just gradual like this. Does it every time. Every time. So you don't really usually see a V shape which just goes right back down like this again. You usually see a V shape which just does this and then like literally just that. Yeah, yeah, this is US 500 Nasdaq here. So I mean, yeah, you rarely see a V shape which just gets instantly reversed. Like I mean, if you look at all the previous examples, you don't see V shape reverse, V shape reverse. I mean, in this case, you did see a V shape, it did actually reverse from the highs, but we've surpassed the highs quite significantly here. I remember covering gold last stream as well. So yep, we respected this and just broke down. I mean, I covered this in the previous streams as well. That I think gold looks like a more toppy formation. Like if you compare to obviously here, it had the nuke, then it had the crab, the crab, the crab, then the bleed through many years of a bear market, and it seems like it's in that place now, where we have the chop, the chop, the chop, and then the bleed into a bear market. So I've said that basic buying gold now is just absolutely mental in my opinion. Ridiculous. And then I have this chart, obviously, which I just posted in my channel, which coincides with obviously August. If this happens to play out perfectly, the amount of money which is going to be made is insane. Insane. Short to nearly the peak bottom, long to new highs. Let me do this calculation again. So we have bottom for the fuck. So we have, let's just say theoretically that's the bottom. See, there's two patterns which are smashing against each other right now, right? You have 777, 728, 490. So we're seeing like we're forming tops after bottoming quicker than previous cycles, which is expected, right? Given that Bitcoin is becoming a more Wall Street asset and Wall Street only like up only. Um, so this was expected. We have that pattern. However, that means we're top. We're not top. We'd form our first high I made this prediction as well. April, May, April, May, June. Yeah, I mean, because the thing is, if you view this from here, so you have 777, 728, 490 from the bottom to the first high. So if we do, let's say the bottom is exactly 60k, the current wick low, in the middle 490, that would put us at the top if this was the bottom. However, if we see a gradual decline like every other one, it would mean we form a top. Fuck's sake. It would mean we form a top between like 380 to 400. But then if you drag this along to there, it would mean that we form our first all-time high in August 2027. Yeah, I mean, it's going to be very interesting to see how this develops. Very interesting. And obviously, you have this small little pattern as well. January, December, November. So you could see 1 month changing, which would mean October. But I've put August, October. And the reason I've put August, October is because we see the same thing at the highs. So we have November, December, November, October. 1 month difference, which would mean that the next top is not going to be in Q4. It's going to be in Q3. And that's going to fuck everyone up because they're going to all be calling for Q4 new highs yet again. This is obviously in the next like 1.5 years. Most people probably not going to remember it. I definitely will. If anybody has any questions, let me know. We've been on for about an hour so far. Trade markets need to dump. I mean, they're very overextended, but the issue is, it's like Nasdaq doesn't look like it would retrace its entire V shape. It would be very surprising if it did. I would love it because then Bitcoin would fucking fall off a cliff, but we'll have to see. I think we're more likely to see trade fire do like this. Then once Bitcoin gets to like August or close to August, we see this nuke. That marks the bottom for Bitcoin. I think that seems more plausible. And I don't think Bitcoin is going to perform very well when S&P is just gradually moving upwards. The only reason why Bitcoin pumped quite nicely is because of this massive V shape from Legacy, right? People buying the ETFs and stuff. Other than that, I don't think Bitcoin's going to perform just because of this slow twopping. I'm wondering if it's better to have a long position about 150 just buy spot 78. What do you think? If you want to be extremely safe, it's always good to have spot because with leverage there are risks. So I mean, you could always buy half spot, the other half leverage, then you can increase your exposure with keeping some of it in spot. You're thinking August 2027 for a new all-time high. I thought possibly sooner, like near May. No, not August. Like it would be like around a bit sooner, but we'll have to see what happens in August this year first because PA can change things and the timings. So it's more one of the things where you have to wait for August, see where Bitcoin is, and then decide. But yeah, all right, I'm gonna end the recording on Streamlabs now, so it doesn't take years to upload, but.